Good morning and welcome back to Almus Market Mornings. The cooler than forecast US inflation helped with some consolidation in a trendy market. The dollar remained range bound. Bond traders were quiet while equity saw some recovery. It wasn't just the US. India's CPI came in below central bank's target, rising by 3.61% in February, the lowest in 7 months and well below economists' expectations. Good morning, JK. Quiet day yesterday. Despite the data, there are ongoing tariff-related developments. But do you think this lower inflation print from India increases the odds of another rate cut by RBI?
Good morning, Swaraj. Yes, I think the inflation news from India was quite good, coming much below expectations at 3.61%. And to answer your question whether it leads to more rate cuts, it depends on sustainability of the lower inflation. But as of now, it does look that based on good Kharif crops, and also the lower oil prices that has come to stay for some time now, we will have lower inflation for quarter four, and also outlook for FY26 is also not so bad as far as inflation is concerned. So I think we will have more rate cuts. And now that even the outlook for Fed moves are improved towards more rate cuts, I think RBI may be continuing to focus on growth, and therefore cut the rate maybe twice in the next two consecutive meetings. And that's my view, unless something different happens because of tariff or anything like that. Given as of now, I think more rate cuts are possible. And good thing is that we also had a better inflation number from the US. All the headline numbers and the core numbers were quite encouraging. Of course, the fall was mainly driven by lower airfares and also lower gasoline prices. Now, once again, these numbers have not taken into account the impact that the tariffs can have going forward, because tariff or trade wars are continuing, and there has been a lot of flip-flop on the tariffs, even as late as a few hours back. And Trump has been saying that after April 2, there will be very little flexibility. There will be no flexibility at all as far tariffs are concerned. So April 2 is a D-Day as far as tariff is concerned. Therefore, that uncertainty on the inflation outlook remains. That's why the market has not reacted much as far as the bond market in US or bond yields are concerned. Stock market, of course, did recover because, as we shared earlier, the S&P 500 had touched the 200 DMA, and then the Nasdaq had fallen more than 15%. That recovery is more of technical in nature. But the inflation number is definitely something as of now encouraging, but more uncertainty remains. We will have some more indications today when the PPI numbers are announced tonight from US. There have been, of course, the other developments in geopolitics also. Putin is unlikely to embrace US proposal for a 30-day ceasefire. That is as per the Russian sources. But again, I think there's a lot of negotiations that are on, behind the doors, which will eventually see, some sort of a truce that is coming in this uh, situation. On the economy, as I said, CPI was better, but then there is also a view emerging from leading investment bankers that there is a 40% chance of a US recession this year, and the risk of lasting damage to the country's standing as an investment destination if administration undermines the trust in the US governance. And particularly, we have seen so many changes, policy changes happening in a very short period of time. Apart from cut down in the government expenditure and huge layoffs, all these things, it's not inconceivable to see that the US economy will weaken. That is the voice of a very large investment banker. So that could be something that is playing in the minds of the traders. Definitely, uh, for the stock market, it's not good. As far as the currency market is concerned, I think you can just see how things have altered in the last 1 month or so. US was not expected to cut more than once. Some even went to the extent of saying there can be a hike in case of tariff related hike in inflation. And Europe was expected to cut down to 2%, and Japan was still at 0.25%. But since then, not only has the US outlook on rates has changed, now market is discounting as much as 85 basis points of cut this year. That means, it can be even more than three rate cuts this year, starting in May month. So this month we have a meeting where there will be no change, but May there is a probability of almost 50% that they will cut the rate, starting in May. On the European side, after the recent development on the fiscal front, and huge spending that is expected to happen to give boost to the economy, uh, there is very little chance that there can be further rate cuts. In fact, the ECB president who spoke yesterday was also very non-committal. In fact, she was saying that it's always not possible to meet the inflation target. So she is definitely expecting a hike in inflation, not only because of fiscal spending in the Europe, but also possibly because of the tariffs that will come through. And we know in Japan that the steady stream of strong data has actually pushed up the yields in Japan. They've already they have already hiked three times in the last 6 months on their rates, and they are expected to hike perhaps in May. Yes, in March they will hold, but in May they will hike. So the situation on the monetary policy among the major countries has actually taken a turn, and that is what is actually supporting the other currencies or keeping the dollar subdued. Apart from the what I mentioned about possibility of US getting into a recession, and possibly the investors now shifting away from the high priced US equities to other value buys in other markets like China, and possibly some other EMs as well. So that is what is guiding the USD. And USD, of course, still remains in the weakest, almost at the weakest point of the last 5 months. There is some resistance in the euro at 1.0940 that has been tested a couple of times. There's some profit taking emerging at these levels, but I think we need some fresh trigger before it can make an attempt to break 1.10 psychological level. Similarly, on the dollar index, we have a strong support at 103.30 as well. And on the rupee, we had another quiet day, but interestingly, rupee was tending to strengthen yesterday. Uh, Despite some weakness seen in the Asian currencies. So this again is put down to a few factors like consistent offers from PSU banks above 83.40, and then FI outflows have now trickled down to small amounts. So there are no large outflows that we have been seeing from FIs. That's one thing. Then, of course, the oil price coming off in a big way in the last few weeks has also helped the sentiment. Then the dollar index falling by 4% in the last 1 month. So all these things, market is unable to ignore it for too long, and exporters getting better rate because of almost high, all time. I mean, not too far away from the all time high of the USD INR, and premiums improving. So some hints of exporters enhanced activity is also seen. So that is putting the rupee slightly on a stronger note. Yes, I think right now we are taking a view on the rupee not beyond April 2nd. So we perhaps till March 31st in the financial year close, we think the rupee can be stronger. But what happens after April 2nd is the what shape the tariff policies by the US government takes, and then that will determine the overall dollar direction to some extent. Although the undercurrent seems to be one of dollar weakness. Either way, whether the tariffs are revised down or even the tariffs go ahead as proposed, I think US economy is going to get affected, not only because of tariffs, but also due to other policies. The undercurrent is dollar weakness, but then there can be some volatility until things settle down in the coming months. Thank you.
Thank you, JK. And I think a lot to look forward to in the coming days. But the major theme, especially on the monetary front, which you rightly pointed out, was if we look at the current market pricing for the rate path, it looks lower rates for the US starting May, while for the EU, which is planning fiscal spending, it looks like the cuts would reduce. While on the on the Japanese front, they are on a hiking path. So a lot of divergent monetary path, and that's the themes markets are playing with. For the rupee, it was another quiet day, tending to strengthen consistent central bank intervention along with dwindling FII outflows. So it reduced some pressure for the currency along with the weak dollar index and lower oil prices. That's it from us today. Wishing everyone a very happy Holi, and we'll see you all on Monday with a fresh round of updates. Thanks for listening.